So far in 2024, around 170 new fund offers have hit the market, and some of them are boasting returns as high as 32%. In fact, some funds launched last year have delivered massive returns of up to 130%. Pretty impressive, right? Well, hold on to your horses, because not all NFOs are winners. In fact, more than half of the NFOs launched last year failed to outperform their benchmark index. And over a 3-year period, that number increased to 64%. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of personal finance and investing. New fund offer is when a mutual fund company launches a scheme for the first time. This means NFOs lack a historical track record. So unlike established funds, you cannot predict their returns or performance pattern in different market conditions. And here's why this video. So in this video, we are going to look at the 5 crucial factors to look at while selecting or evaluating an NFO. Imagine you are an investor who already has a diversified portfolio of mutual funds, and you are invested in broad range of sectors such as technology, healthcare and finance. Now a big mutual fund house has launched a new scheme, an NFO that focuses on the emerging artificial intelligence sector. Now this NFO is unique because it's one of the few funds that specifically targets booming artificial intelligence companies that were not specifically targeted by any existing funds. This makes the NFO a unique investment proposition. This scheme can add a new dimension to investors' portfolio that wasn't there before. But if another NFO comes up that uses investment strategies similar to that of existing funds in the market, then it might not be a good idea to invest in this new fund. The existing funds have a proven track record, so why would you go for the NFO then? So look for NFOs that can fill a gap in your existing portfolio. What kind of returns to expect from the NFO? Well, the performance of the benchmark index serves as a point of reference. For example, the Invesco India Manufacturing Fund will be launched on 8th August 2024 and uses the Nifty India Manufacturing Index as its benchmark index. So while analyzing this NFO, you need to check the components of the benchmark index. Identify the types of shares included and how many of these are part of broader indices like the Nifty 50 or Nifty Next 50. This analysis helps determine the sustainability of the returns. Like the top 10 stocks in Nifty India Manufacturing Index are a part of Nifty 50 and Nifty Next 50 Index. Additionally, you can check the index correlation with broader index. So for instance, the Nifty India Manufacturing Index has a correlation factor of 0.92 with Nifty 50. So a strong correlation indicates that the returns are likely to be similar. You can find such data in the index fact sheet. This approach is more helpful in evaluating thematic NFOs. But for NFOs using new and different investment strategies like factor funds, you will need to check the track record of the fund manager, which we are going to discuss in the next section. Now, if the new scheme will be managed by a fund manager who has a track record of successful fund management, then it can be a positive indicator. For example, Canara Robeco Manufacturing Fund launched in March 2024 is managed by Sri Datta Bhandwaldar, who is the head of equities at Canara Robeco Mutual Fund. He already manages an AUM of over 80,000 crore in 12 open-ended equity schemes at the fund house. And most of the funds managed by him have outperformed their benchmark over the long term. So the fund manager's performance can be a crucial data to track while evaluating an NFO. Now, if the new fund is employing a momentum-based investing strategy, the size of the assets under management plays a crucial role. In simple terms, momentum buying means purchasing a stock which has seen a rise in prices in the recent past and is likely to continue its upward momentum going forward. This requires frequent changes to the portfolio so that you are always invested in stocks that are in momentum. For more, you may watch our other video. The link is in the description. Coming back to the topic. So when a fund has a smaller AUM, the fund manager can adjust the portfolio in response to market conditions quickly and easily, which is essential for maintaining the strategy's effectiveness. On the other hand, large AUM affects the fund's ability to move in and out of positions swiftly, potentially diluting returns and diminishing the benefits of a momentum-based approach. Now the table on your screen highlights 3 key pieces of data: the number of NFOs launched, the amount collected by mutual funds through these NFOs, and the Nifty 50 returns for each financial year. So in financial year 21, 84 NFOs were launched, raising around 42,000 crores. That year, Nifty 50 delivered an impressive 78% return to investors. The following year, market was quite euphoric, and fund houses took advantage by launching 176 new funds, collecting nearly 1,08,000 crores. However, the Nifty 50 couldn't match its previous year's performance. Then in financial year 23, despite the bearish market conditions, fund houses launched even more NFOs. Yet they struggled to collect more funds as investors were skeptical about the performance of stock market. So whenever you are evaluating an NFO, do consider the current and projected market conditions. But there is always an exception. An NFO might have a higher chance of outperforming its benchmark in certain economic environments. For example, a fund focused on a specific sector or theme, such as defense or manufacturing, may perform better during a boom. Like last year, HDFC Mutual Fund capitalized on the defense sector's boom and delivered impressive returns. So now, as we conclude this video, keep in mind that neither all NFOs underperform nor all of them do exceptionally well. The trick is finding the ones that fit well in your portfolio. And most importantly, don't get overwhelmed. Go for such investments only if they suit your risk profile. If you want to invest, well, ET Money offers NFOs on its app. Please feel free to explore.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.